right, and here we go. My name is Ryan Kleiss. Of course, Robert sometimes is the one doing these classes as well. And this is Rev Up Your Sales in Reverse. And really what we're doing today is talking about the reverse mortgage, learning about it for those of you that have been to the class before, hopefully reinforcing what we've learned before. But the whole idea is that after doing these loans for the last 15 years, I've realized that this loan is more about a relationship type situation than it is just about a loan. And I want to show you all how I think it can help your business. So we will learn about the loan, but we'll also learn about how I feel it's helped realtors increase their business over the last basically 10 years I've been working with realtors and reverse mortgages. So with that being said, I'm going to get started. Remember, I'll answer questions in about 30 minutes. And then again, after the Zoom class is over. So here we go. So here's what I really want everybody to know today about reverse mortgages. And it's not necessarily how the loan works or all these questions that maybe we think clients are going to ask. But what I found is a reverse mortgage is really more about clients needing information and needing help. And along those lines, what I've seen over the last 10 years of working with you all is I've really seen how a reverse mortgage and a realtor become important and actually help you to get a client into your pipeline. And let's talk about the top 3 ways I see a reverse mortgage helping realtors' pipelines, and then we'll talk about the loan. So the number one thing I want everybody to know is usually when a client is asking about a reverse mortgage, it's not necessarily because they want a reverse mortgage. I mean, I've been in this business for a while. And what I've learned is when somebody's asking me about a reverse mortgage, it's not necessarily because they want a reverse mortgage. It's because they need help. They have a home with equity. They maybe need to get equity out. Maybe the mortgage payment is high. Maybe there's something going on financially. Well, here's the other side of that story. You know that more than half of the people that actually inquire about a reverse mortgage don't get one. And those numbers have been pretty high lately. Sometimes 60% of the people that inquire about a reverse mortgage, they never get one. So what does that mean for you as a realtor? This is what it means. A client is basically saying, how does a reverse mortgage work? Or do you know about reverse mortgages? They're telling you, look, I am a homeowner. I might need some help figuring out finances, and I've heard a reverse mortgage can help. Well, at the end of the day, if more times than not, a reverse mortgage isn't the answer for them, then you have a client coming back to you that might need to sell their home because a reverse mortgage didn't solve either their cash flow issue or it didn't help them get cash out of the house. It didn't solve the problem they still have. So I just want you to know, number one, when a client is asking you about a reverse mortgage, they're really saying, I'm a homeowner, I need some help, and the reverse mortgage might not do it. They're not telling you that, but I'm telling you that. And so I want you to keep them close to you and check in with them so that you can be ready to step in and help if and when a reverse mortgage doesn't work out for them. Now, one of the big things that we've been doing for the last 10 years, of course, is helping your clients buy homes using a reverse mortgage. And why that is important is that in retirement, sometimes it's tougher to get loans. So we need a loan that will help people refinance and buy homes. Well, the reverse mortgage will help people get a loan because we can get them qualified when maybe they don't qualify for any other loan. So a client that might not have otherwise listed their home with you may list a home now because they can qualify for a loan to buy their next home. So that's what we're going to spend quite a bit of time on today. Number 2 is we can really help realtors hopefully change a client who wouldn't list a home into a listing because we have a loan that they can actually use to buy a home. The third way that I've really seen realtors be able to grab some business from reverse mortgages is this. Well, a lot of clients out there already have reverse mortgages, okay? Reverse mortgage has been around, the government form of the reverse mortgage has been around since about 1990. So there's a lot of reverse mortgages that are already in place out there. And you know, a lot of people who have reverse mortgages, not only that, but a lot of their heirs, they have no idea how to get control of the property when mom and dad or their relatives have passed away. So there is a place for you to not only let people with reverse mortgages know, hey, the property, to sell the property. So what you're really doing is inserting yourself in for a future listing in advance of the event happening. So they'll return to you and use you because they know you're the one that's going to help them. So in a slide coming up, I'm going to let you know how you're going to do that and how you're going to make sure an heir can get the property after their loved ones have passed away. So at the end of the day, these three things, they really don't have a lot to do with knowing about how a reverse mortgage works, but they have a lot to do with knowing that the product itself does help you in your business. And so I'm glad that you're here today because I'm going to go through these 3 bullet points. And then at the end, hopefully we'll have time because I'll actually go through some fun things you can do to try to get some of that business in the door. So here we go. We're learning about the top 3 ways a reverse mortgage can help your business. But we need to start with a little bit of foundation. Let's remind ourselves what a reverse mortgage really is. Okay, it's just a loan, right? It's like a loan you have now, maybe on your home. Here's the difference. When you get your statement in the mail, you have to send a payment in. Otherwise, you're behind a payment, right? Well, a reverse mortgage, you get a statement in the mail, except it gives you the option of not sending a payment in. So if you say, I'm not going to send a payment in, then you just have added whatever was due for that month onto the balance of your loan. So check it out. A regular loan, use it to buy a home or refinance a home, right? A reverse mortgage, you use it to buy a home or refinance a home. Same thing. A regular loan, you're just putting your home as collateral. A reverse mortgage, you're putting your home up as collateral. No differences yet. The difference comes really when that statement shows up. And with the reverse mortgage, you say, oh, there's $1,500 is what the cost is for the loan this month. I don't want to send that in. Okay, no problem. Nobody cares. Just next month, when you get your statement, you'll owe $1,500 more than you did the month before because you didn't send in the payment. On a regular loan, you would have sent that money in and it would have reflected in your balance going lower. That's really it. That's the biggest difference between a reverse mortgage and a regular loan is that when you get the statement, you're deciding if you want to send a payment in. And if you do not send a payment in, it simply is added to what you owe. So a client might say, well, Ryan, what if that statement comes every month and I don't make a payment? Every single month for my entire life, I don't make that payment. What's going to happen? Is there an end point? Is this a 30-year loan? What is this? Well, the loan is for the life of the borrowers. So as long as you live in the home, even if you're not sending in the payment, you can live there as long as you want. It's just that by not sending in the payments, you have to know my balance is going up by whatever the cost was each month for the loan. So you'll have your balance going up incrementally each month because you decide I'm not going to make a payment. But it's really up to you. And I think that's what I really want everybody to know. It's not up to the mortgage company, to the government. It's not up to anybody how this loan runs. It's up to the client every month deciding. If I don't want to send anything in, I can expect my balance to go up by what is shown on the statement this month. If I send in half, maybe $1,500 is what the cost was, and I send in $750. Cool. You know that next month you'll have $750 added to your balance. The client decides what their balance does, decides everything really on how the loan is run. Ultimately, to the point of them saying, I won't send in any money for the rest of my life. No problem. That's your decision. Just know your balance will go up as a result. Now, it used to be that we could only refinance a home using a reverse mortgage. So like a Fannie Mae, a regular conventional loan, you refinance a home, you could pull cash out, etc. You know how that loan works. But then a Fannie Mae could also be used as a down, put a down payment to buy a house. Well, a reverse mortgage is the same thing now. You literally are just borrowing money to either refinance a home, you pay off the loan you have now, maybe you get some cash out, but you've just refinanced your house and now you've refinanced with a reverse mortgage, which means that what? You have a loan in place with an optional payment feature. That's really all you've done. On the purchase loan, you've been able to buy a home. And after you've used the reverse mortgage to buy the home, you put a down payment down. We give you money. We'll go through an example in a minute. And now you've bought a home. You have a reverse mortgage in place. And again, you have the optional payment feature. You decide what you want to do every month. So that's kind of nice. You can actually buy a home and maybe you make payments on it for a while. And then maybe you retire. Or maybe, unfortunately, something happens. You can't afford the payment anymore. No one's going to care if you stop sending in the payment. You have the house to live in the rest of your life. So that's kind of nice. I think that's kind of nice for an agent to know that when you're selling someone a house, we've provided a way to make sure that you don't have to get a call one day, right? That someone is telling you, I can't afford this house anymore. It's nice to know that we've given some stability with the loan that has been used to buy the home. Okay, here's a big deal right here. Plenty of clients have called in and have said, Ryan, I'm calling you because I want a reverse mortgage. And I'm like, really? You sure about that? Because a lot of people get them because they have no other choices. Okay, I'm kind of kidding a little bit, but that's literally almost how the conversations go. And they say, well, I understand a reverse mortgage might help me for this reason. And I'd say, okay, so you're calling because maybe a reverse mortgage is going to help you. Maybe you can't get another loan. Is that close to being correct? Yes, I've already tried to get an equity line, or I've tried to qualify for a regular loan, and I can't. And so someone said I could qualify for reverse. Is that true? And I'd say, yes, it looks like you can. Okay, you can qualify for this loan, maybe when you don't qualify for any other financing. So that's why you're calling me today. Yes, I'm calling you because I understand that. And so I can get a reverse to buy a house or refinance a house, even though I couldn't qualify for a regular loan. Absolutely. That is a big deal in our industry. But then I let them know, I was like, look, if you just want to qualify for this loan and then treat it like a regular loan, you can. Remember, you can just send a payment in and it'll actually start to work like a regular loan. You can pay down principal, you can pay interest only, or one day you just stop and nobody will care. So you see how, hopefully that's starting to get in a little bit on how that works. It's really just a loan, optional payment features. But the cool thing is that we can actually get people qualified for this loan when maybe they don't qualify for any other loan. All right. This is one that I've learned after many, many years. Clients will say, I'm not going to sell. Ryan, I'm here, you're here because I want a reverse mortgage because I'm having a hard time with the payments or I need to get some money out. And I've been here for a long time and I don't ever plan on leaving. So I'm going to do a reverse mortgage. I'd say, okay, cool. I go through their finances. I go through, the value of their home, how much they owe. And there are cases where they don't qualify. Remember, I said a lot of people don't get reverses. So it's that point in time when I'm telling them, I know you want to stay here. I know you want this reverse, but unfortunately, it's not going to work out in this home. And they will say, well, what are my other options? And I let them know, well, if you're not qualifying for a reverse, you're probably not qualifying for any other loan. Let's look at your expenses every month. What can you do? Not much. A lot of people can do to lower their expenses nowadays. Usually if I'm there, they've already tried to lower their expenses. So a lot of individuals who have said for years, who have told you as realtors, I'm not selling, I'm going to stay here. That actually ends up changing. So the reason I mention this is you have to look for other signs. When we're looking at houses and people that live in the houses, and we see the houses maybe there's some paint that hasn't been done in a while. Maybe there's just things that we could tell that there's not a lot of cash in that home. Well, this is where we have to start saying this client might think they're going to be able to stay there, but they're going to get to the point where they figure out they can't. And that's where I want you all to be ready and at least let them know that you have solutions for them when that day comes. And we'll talk about that coming up more again towards the end of class. But just know I've had so many people that have said, I'm never going to sell. I don't need to talk to a realtor. And then it ends up they sell. Okay. So as long as you have a basic understanding of a reverse mortgage, right? I've said it's a lot like a regular loan. If a client were to ask you, hey, Jose, hey, Julie, how does this reverse mortgage work? And you now know you could say, well, you know how your loan works right now. You've borrowed money and you make a payment every month, right? Well, yeah, that's how a loan works. and you still own your home, sure. You still could sell it, sure. You could do all these things at your home, right? Yes. Well, reverse mortgage works the same way, except that when a statement shows up on a reverse mortgage, if you don't want to make the payment, you don't have to. Whatever was due is just added to what you owe. And that's it. That's really how the loan works. So you should have that covered. That answers a lot of their questions. Maybe a client might say, oh, so I can refinance with the reverse and I don't have to make a payment if I don't want to. Yes. Well, can I get money out? Well, sure. You can get cash out like you would a regular refinance. You can have an equity line built in, like you could get an equity line on a regular loan, right? So many similarities between the reverse and the regular mortgage. And so if you just have this little bit of information, you can be very useful. And the reason why I want you to have this information, because I want them to talk to you. And I want you to be able to spend a minute with them to, take a quick look. Does it seem like this person is asking because you can kind of feel trouble brewing? And those few extra minutes you could spend with them answering some basic questions might help keep you involved with their situation, so that maybe when it would come back from a guy like me and I'm saying, sorry, reverse isn't going to work for you, you still are there to receive the listing. Okay. Again, reverse mortgages to me are more about a relationship building tool than they are about a client just asking about a loan and going and get one. Like, how do I get a refinance on a regular 30-year fixed? That's probably not your client. They're going to call up a bank or whatever. They're going to get a 30-year fixed done and they're done. You have no dealings with that. When they ask about a reverse mortgage, it's so much different. It's so much an opportunity for you to take a minute and listen and know that this client might need more help than a loan guy like me can provide. Okay, I think I've beaten that down enough, right? Enough already, Ryan. I get it. Let's go through an example of what happens with a reverse purchase. So this is the point where a client has actually said, I'm going to sell my house. I'm going to go somewhere else. Maybe I need to downsize. Maybe the mortgage payment's too high. Maybe a reverse mortgage guy just said, I can't get a reverse mortgage. Okay, what's next for them? Well, let's run through a scenario. Let's say that you run across a client, 73 years old. Why do we want another age? This is one thing about a reverse mortgage. We base loan amounts on age. The older a client is, the bigger the loan amount they can get from us. So in this case, we have a 73-year-old borrower, and they have a home, and you sold it for them. It sold for $850. And of course, they had a loan on it. They had to pay off a loan, cover the cost of selling the home, and now they have $400,000 cash in their pocket. And they're telling you, I've got $400,000 cash. I need to find a home that, number one, is going to fit me for the rest of my life. Number two, I don't know that I could take on another big mortgage payment. I just got rid of a mortgage payment. So I'm concerned about my finances. Okay. So you need a roof over your head for the rest of your life. You're concerned about bringing on a loan, perhaps. Maybe you don't qualify for a loan. And they tell you, I need to keep some of that $400,000 in the bank. Oh boy, that's a tall order. Get a house, worried about getting a loan, keep a lot of money in the bank. Okay, you can probably tell where I'm leading you, right? So a reverse purchase can help. Let's say that they find a home for $600,000. By the way, these numbers are scalable. We see a lot of people selling homes for $1 million and buying $800,000 homes. So I want you just to more pay attention to the process here than necessarily these exact figures. So let's say in this case, find a client, sell their home. They have $400,000 cash. They've said, I've identified a place for $600 that I would like. Okay. Well, I remember you said that you don't want to put all $400 down. Right. I need to keep money in the bank. I remember you said you're concerned about mortgages. That's right. I don't know if I qualify or I don't want a big payment. Okay. Step in the reverse purchase loan. Based on a 73-year-old age, I would tell them you need to put down $259. That means I'm giving a reverse mortgage for $341. So the 73-year-old borrower has now bought a home for $600,000. They've used $259 of their own money, and I've given them a loan for $341. So the nice thing here is that they had $400, right? And they only put down $259. So they got $141,000 in the bank. Hey, that's pretty good. I'd take that. $141,000 in the bank for incidentals, emergencies, all kinds of stuff. And then the other side of the situation is that They also have a home where if they choose not to make a payment or something goes wrong and they can't make a monthly mortgage payment, or they never wanted to make one from the get-go, no problem. We're not requiring them to make a monthly mortgage payment. So what a change this is. This is somebody that was in a home with a mortgage that was probably a little tight on money, couldn't get access to the cash in their home. That doesn't sound like fun. To a situation where they've rebought a home, they've put $140,000 in the bank, and they've made the mortgage payment such that if they don't want to pay it, they don't have to, and they can still keep the house for the rest of their lives. So this is where a reverse purchase can really help you bring a listing online, right? We're talking about, remember the olden days, they used to talk about shadow inventory, right? Excuse me, that was big like in 2009 and 10, where there's supposedly all these homes that weren't coming to the market because these institutions own them. You know the story. I call these things shadow listings, which means that there's a lot of homeowners that do need to list. They're tight on cash, but they need a primer to be able to help that house get on the market. They need to know it's going to be okay when they go buy another home. Oh boy, you wouldn't believe the amount, how many homes I've been in that are worth $2 million, $4 million, $8 million. And the individuals are living on Social Security income. I'm telling you. And it surprises me every time. A lot of them were business owners. They were self-employed. There were attorneys. There were all kinds of stuff. And when they retired, something didn't go right, or they didn't put enough away, or the people they'd sold their business to, excuse me, weren't taking care of the business right. And so they couldn't get the stream of income anymore. So many reasons why we run into individuals living in very expensive homes, very nice lifestyles with only Social Security coming in. So that is where we see a lot of these listings. This is where when a client is asking you about a reverse mortgage, you got to say, why are they asking me about it? It's not because it's like they want to lower their rate on their 30-year fix. No, they're saying, I need some help. I've heard reverse mortgage. I've seen it on TV. Maybe this is something I'm going to like. Maybe they don't like it, but you're there to know that I got somebody who I need to help and they might sell. Okay. That's how reverse purchase works. Downsizing, using a reverse mortgage to buy their next home. They get to put cash in the bank. They make their mortgage payment optional. So this is how a lot of transactions are happening that we're doing all the time. By the way, remember I said you can get this loan and maybe you can't get any other loan? And we don't look at really FICO scores. We can get by a lot on Social Security income. We just have a lot of different underwriting requirements compared to a normal loan that allows people to qualify. Okay, almost to questions. So one thing, even though I say I can get someone a reverse purchase loan or reverse mortgage when they can't get any other loan, doesn't mean it happens for everybody. We do turn down some individuals. And so what I want to make sure we do is we're not turning down somebody after they've already sold their home. Okay. So the pre-underwriting becomes very important in that once a client has said, I'm going to sell my home, let's make sure we can get them a loan to buy their next home. We don't have automated underwriting engines. We don't underwrite with DU. We don't do any of that Fannie Mae stuff. This is old school underwriting. I'm looking line by line on the credit report. I'm looking at their old homeowners insurance. I'm looking at their old tax history on their old house. I'm looking at different things, and it takes time. So there's no way to spit out a reverse mortgage loan approval in a couple of days. It's possible, but probably not probable, at least not a good job. So the pre-underwriting to make sure we can do a loan for somebody, that can take a week or 2 weeks if they have bad credit, because we can get loans done for bad credit individuals. But it takes time for us to get that loan set up properly. So what I'm trying to say here is let's get clients pre-underwritten before we'd ever sell their home. And we need a little bit of time to do that. All right, the client needs to get counseling before they can get a reverse mortgage. What does that mean? Well, really FHA, the government in general, they want to make sure that our clients are understanding the loans that they're going to be in for possibly the rest of their lives. So they don't trust us as loan individuals to make sure that we're doing our jobs properly or that we even know how the loan works, because you don't have to get a special license to do reverse mortgage. So they want to know that the clients are at least getting the basic information. So when a client wants to get a reverse mortgage, we provide them a list of government approved, FHA approved, nonprofit counseling companies. The client will call them. They'll spend about 45 minutes or an hour on the phone with them, and they will get a reverse mortgage certificate. We need that certificate before we can actually move forward with getting the loan done on their next home. So we want to do that way ahead in the process. All right. A few other bullet points here, nothing really, that big of a deal, I'd say, but stuff that still needs to be done properly. But here's the deal. This hour presentation is nowhere near going to answer questions that maybe you run across, or maybe you're about to sit down with a client who has a reverse mortgage and you want to be able to be handy to them. Maybe a client has asked you about a reverse mortgage. Maybe you see a client is going to need to get a loan to buy a home, but they don't qualify for anything, like all these different things. So we just have a Realtor Hotline here. We man this usually 7 days a week with somebody who should have knowledge on reverse mortgages. So that way you can call if you got a question, if you're meeting with somebody, we just want to make sure you have access to good information and timely. So use that number and give us a call. It's only for realtors. Okay, let's see here. I don't know if Crystal is back. She's helping me, but if not,
I'm back, and we have just one question here. Let's see. From Sim, she says, let's say if the borrower is still owner of the property and wants to move to an assistance living facility, and the borrower rents it out, is it still under the reverse mortgage?
Okay, so we're going to get to that a little bit coming up, but basically the idea is that a reverse mortgage does need to be owner occupied. So you could leave the property for up to 12 months, but you can't really rent the whole thing out and be gone. And then I'll get to more of that coming up. So hopefully that at least answers that part of the question.
Sounds good. We don't have any questions right now, but if anyone has any questions, we'll be answering them at the end of class at 12 o'clock. I don't know if it was mentioned. I think Elsie may have mentioned it, but we are recording and we're sending the copy over to you. And if anyone still needs the copy of the PowerPoint sent over to you, please go ahead and just shoot me over a private message on Zoom, and then I'll get that to you over email.
Okay, thank you. I needed a break. All right, let's see. Let's talk a little bit about what's happening out there today. And I believe a lot of you already have this information, so bear with me if you've heard this before. But one thing we know is that there's a reason why a reverse mortgage exists. There's a reason why people sell their homes when they don't want to. There's a reason for these things. And that is usually we have house rich, cash poor situation, and it is all over the place. Remember I talked about, I was in a $7 million home earlier this week on Tuesday, and Social Security income, that's it, no money in the bank. What? Yeah. So this is the kind of stuff is out there. We have so much money in equity in our homes. In California, right? Whether we think we're super smart for doing it or not, but if we bought a home in California, hey, we have a lot of equity. So the tough thing is trying to get to that equity. But here, let's look at this for an example. Of our 65 and year older homeowners, there's almost 8 trillion in equity there. 8 trillion. When I started doing this class roughly, I don't know, I think it was maybe 10 years ago. I think we had a number up there that was like 1 trillion in equity. I mean, it was 2 trillion in equity when we started. It went from 2 trillion to 8 trillion. And every time I increase this number, I'm always like, this is incredible to me, but is it really? Probably not, because it's California. This is nationwide, but I know a lot of this equity is in California, which is good for you all to know. These are individuals that may need to sell their homes just because they are trying to figure out how I'm going to provide for myself, and I can't do it with all of the equity stuck in the home and none of it in my bank account. Oh, I missed a whole slide. Can you believe that? No wonder why I fell out of sorts. Here are the stats I think you all know. First of all, we have plenty of older homeowners, right? 10,000 boomers are turning 65 every day. That's going to happen for the next 8 years. A lot of individuals hitting that 65 mark. A lot of their parents are still alive as well. So between boomers and their parents, we probably have over 100 million individuals that are 56 years and older. And a lot of them are homeowners. here's something I think a lot of us identify with, not just boomers, but most generations in general are behind in retirement. I'm a Gen X, behind on retirement, right? So that's a problem, but it's a little bit bigger problem for our boomers because they're retiring and they're a little underfunded. Um, Almost half of our boomers have no retirement savings. It doesn't matter what they did for a living, how nice of a home they live in. None of those things matter because a lot of them just have no retirement savings. And of our boomers that have some retirement savings, some of them don't have a bunch, maybe 100,000. So the point is that we're a little tight on retirement, right? And Social Security, we know that doesn't do a whole lot. It does pay some bills, thankfully, but Social Security is just not going to put us at a point where we're comfortable in retirement. Um, we missed out a lot. Boomers, Gen X, a lot of us missed out on what my grandparents had and what my mom's parents had, which were pension plans. That those went away in the 70s. And nobody really let boomers know that it was going to be tougher to save because you had no pension plan. I mean, I always point this out because I think it's interesting, but if you worked for Sears selling garden tools or, Craftsman tools back in the 70s, you had a pension plan. Sears provided a pension plan for you. That's pretty cool. Well, Sears is bankrupt, right? So you can guess how that went. And corporations decided maybe they wanted to make more money. They didn't want to provide pension plans, et cetera, whatever the case may be. They went away. And they let people know, why don't you use this 401k? Well, 401ks are primarily self-funded, right? So we had a whole paradigm shift in the 70s where pension plans went away and we just didn't have a lot of time to learn. My mom's grandpa didn't tell my mom that she wasn't going to have a pension plan like he did, which he had a nice one, and she needed to save more money than he did. They never had that conversation. And, well, sorry, Mom, but you're underfunded in your retirement. So this is where we start to look at that equity in a different way. We start to say, I need this equity to actually help me out. Am I going to sell the house, reverse mortgage? What am I going to do? But at least you have the equity to figure out how to do something. And so that's what we're seeing now. We're seeing more realtors. We're getting more calls of individuals saying, okay, I'm 70. Let's just figure this out. Put the house on the market, do what we need to do. National Association of Realtors, I don't know if you look at their annual housing survey that they do. I looked at 19, I think 20 was the last one I looked at. But you know that over half the people selling their homes are 55 and older. Yeah, all these individuals that say, I'm never leaving, Ryan. You know how many times I've heard someone say they're going to bury themselves in their house and they pass away? And I'm like, it's not really what I came to hear, to talk with you about. But those individuals sell their house, and over half the homes being sold are by 55 and older clientele. So it is happening and things are happening. So we need to just look at who we're talking to. And even though they're saying one thing, something else might be brewing. And that's where your skills, your realtor intuition needs to kick in and figure out or look for signs. A lot of people that call in for reverse mortgages, I can tell you right now, health issues. If one spouse falls ill, usually something is going on and they might need to sell that property. I look at individuals with houses that call in for reverses. Most of the time, their houses have the peeling paint, have not been fixed up in a while. These signs are out there. Older car on the driveway, and that's what your intuition needs to pick up on. Even though someone is telling you, I don't want to sell, Mr. or Mrs. Realtor. Thank you for your time. And you say, well, maybe not now, but I'm going to kind of keep you in mind, or I'm going to give you something or stay in touch. And we have things to help you do that, by the way. I'll show you that coming up. Okay. Let's talk about what happens in the future with the reverse mortgage. So let's say a client gets a reverse mortgage, right? And, well, maybe they have never made a payment. They don't have to. Maybe they've made a payment here or there if they wanted to. It doesn't really matter. They can do whatever they want to do. But when the day comes that, well, we're all going to meet the maker one day, and we say, what happens to the house? What are the heirs going to do? Can the heirs get the house, right? So I'm going to talk about how you insert yourself to get that listing in a few minutes, but let's talk about just the loan itself. So when the borrowers have passed away, if the house has equity, in other words, the house is worth more than what the loan is. In this case, the home was worth $850 and $600,000 is owed on the reverse mortgage. Well, this gets handled much like a regular loan situation. The heirs can say, well, we want to keep the house. We just got to get a new loan to pay off the 600 that was owed on the reverse. The loan company, the government, nobody has any way of saying, no, you can't do that. All they want is their money back. Whoever the reverse mortgage lender is, they just want their $600,000 back. They don't care about the house. So heirs get a loan, find a way to pay off that 600. And of course you inherit the house because that's what happens. You inherit the house as long as what? It's in a trust or you're on title and you're avoiding probate. So nothing different with the reverse mortgage and a regular loan when the house has equity. It's when the house is underwater that it could change with a government insured reverse. Okay, this is only in the case of a government insured reverse mortgage that the underwater situation could happen this way. Let's say the home is worth 700. Let's say we're in a down real estate market in Orange County and a house is worth 700. But the reverse mortgage balance, the parents owed 750. Well, this house is upside down. Well, what if the heirs still want it? Well, they're not going to pay the 750 when the house was 700. That's not reasonable. So what the government says on the FHA insured reverse is, heirs, here's what we'll do for you. We will get the house appraised, normal appraiser. We will take 95% of what the house appraises for. In this case, the house appraised for 700. They take 95% of that, and that is 665. So the heirs only have to get a loan for 665 or find a way to get 665 in, not the 750 that's owed. The FHA and mortgage insurance will come in and pay the difference. So heirs really never have to inherit an upside down home with an FHA insured reverse mortgage. They never have to let the home go to the bank. They have tools here to be able to keep the home. And they may even get a deal on it because mom and dad got the benefit of a $750,000 loan and heirs only have to cough up 665 to get the house. That's the 95% rule. Maybe they don't want the house. Maybe they say, you know what, Ryan, I understand I can get the house for under market value, but we don't want to deal with it. Okay, cool. Go remove all of the things that you want from the home and you don't have to do anything. Eventually what will happen is as soon as the servicer finds out that both borrowers have passed away, they will send a letter out. That letter will say, hello, we understand the borrowers have both passed away. You have 30 days to get back in touch with us. As long as you can touch them with 30 days, no problem. They'll give you up to 12 months to either refinance or sell the property. But if they don't hear back from anybody in 30 days, they think nobody's around and they will put it in foreclosure, like a regular California foreclosure proceeding. They'll issue a notice of default. That's a 90-day thing. Then they'll issue a notice of sale. That's like a 20-day thing, 19-day. And at the end of the day, it'll just go to auction. But the heirs don't have to worry about it. It's a non-recourse loan. FHA has paid the difference or is paying the loss to the lender. So they're never going to contact the heirs and be like, hey, we're going to get yours upside down or anything like that. They're just not going to do it. It's not going to happen. But the third option would be better instead of number two. And that is what? Calling their friend who was a realtor so you can get a short sale listing. Okay, what's the point of this slide? Well, number one, few points actually. It's just for the heirs to understand you can get up to a year to handle the home of a loved one that passed away with the reverse. Whether you're trying to sell it or you want to keep it, you can get time. But you can't just sit and do nothing. You got to get a hold of the servicer in 30 days and say, we're still here. We're ready to do something. So the servicer can say, okay. Now, here is the tricky part, right? And this is where you can be helpful. This is where I want you to be able to let people know who have a reverse already that you can help the heirs to get the property. Let's say that the trust, the house didn't get put in the family trust, okay? Even though there is a trust, let's say. And let's say that the servicer doesn't know the heirs exist. Well, now mom and dad, whoever the loved one is, has passed away. and the heir is calling up the servicer to say, hey, don't put this house in foreclosure, we're here. The servicer is going to say, sorry, we don't know who you are. We have no authorization to speak to you. The house was not in a trust. So right now we won't talk to anybody. Whoa. That's how serious they are. How do we resolve that? Just simply have an authorization form in signed by the original borrower saying it's okay to talk to my son, Frank, if something happens to us. And the servicer then will say, oh, we have an authorized person to speak to. We have an authorized party here. That's one way you can just simply help somebody with the reverse, is making sure that the servicer will talk to the heir. The other way is to make sure that the house is in a trust. Here's something else that's interesting. If somebody does a reverse mortgage and puts a house in the trust after the reverse mortgage is done and does not get it approved by the servicer, do you know that the servicer does not recognize the house being in a trust? Because it wasn't done and they didn't approve it. So there's pitfalls here. There's pitfalls that you need to help the heirs get through so they can get the house, and ultimately they usually sell it and you're the listing agent. So you can reach out to me more about that, because I'm all about, I love to see you all get listings from doing a little something different than what than anybody else knows. And somebody else wonders, how did that person get that listing when I'm there? I live 4 doors down. Oh, well, did you help them make sure the heir was going to get the property? You sure didn't, but you did, and you get the listing, right? So there's ways that you can insert yourselves into these situations, not only to get the listing, I get it, but just to help people, humanity, right? Help make sure they don't go through probate. Probate's not fun. It costs money. Let's help people avoid probate. And that's a way for you to make that relationship. So we have other ways on this stuff inside of our website that you can check out. Okay. All right. Moving on. Couple of things, I've heard a lot of stuff in my 15 years of doing these loans. That's for sure. The Governor Bank owns a house. Well, go back to what I said before. All you're doing is getting a loan. The servicer, the government, nobody wants this house. As a matter of fact, remember the last slide? They'll give the heirs 12 months if they do it right to get the house. The servicers and the government do awful when they foreclose on these homes, because it's such a process and the homes get damaged. They want the heirs to show up and get the house. They don't want to have to foreclose. So yes, the estate can get the house. Make sure that the paperwork is in place to do it properly. Will the heirs lose a future appreciation? Well, we don't know what the balance is going to be when the clients pass away, but whatever equity or appreciation, if you will, is there when the home is passed on to the heirs, of course that's theirs. The lender, the bank, nobody wants any equity. We don't want any of those things. We just want to get paid back for the money we lent. That's it. We want the house to go to the heirs. We give them a year to figure it out. The heirs can't inherit the home. We just went through that. Yes, they can. You be the one to help make sure the heir inherits a home on a reverse mortgage, and you will be the one that gets the business. Next, if a house ends up underwater, I can no longer live there. Okay, this is the big deal that most people get reverse mortgages for, because they hear they can stay there the rest of their lives without making a payment. Yes, you can. The loan is for your lifetime, but you can mess it up. You can get foreclosed on with the reverse mortgage. I hear about it. Hasn't happened to my clients because I know how to help them avoid that. Here's what we need them to know. Occupy the home. It's got to be your primary residence. It doesn't matter. You can rent out. If you got a 3-bedroom house, you can rent 2 bedrooms out. No big deal. You can have people stay there. You can go away on vacation for 7 months. Just don't move somewhere and not come back. It needs to be your primary residence. If you do have to be gone longer than a year, say you're in a nursing home, what's going to happen? Well, here's what I try to let the heirs know. Look, if you're gone longer than a year, you are supposed to refinance and get a different loan or sell the house. But if you don't want to do that, you got to get back home. So somebody needs to get you out of where you're at, keep you home long enough for you to call the servicer and say, did you know we were gone? Did you know that we're back? The servicer might not know anything, but keep paperwork that shows when the intake date was, maybe from the nursing home, to when the date was when you got out. So you can just send in and go, look, I wasn't gone longer than a year. And guess what? They're like, okay, you can go away for a year again. So you could be gone for a while. You just can't, you can be gone for 5 years. You can't do it all in a row. So pay attention to that. And that's the biggest thing. Some people have gotten foreclosed on because they rent the property out and they're like, hey, I'm getting foreclosed on. I'm like, okay, well, when's the last time you were home? Well, it's a rental property. Well, you're going to get foreclosed on. We send out letters. We look for clues to make sure you're still there. Okay. Okay. Here's another way you get foreclosed on. If you don't pay your taxes or your homeowner's insurance or your HOA, you can get foreclosed on. That's pretty much the same with any loan. Eventually, if you don't have homeowner's insurance long enough, the lender's not going to pay it for so long, you'll get foreclosed on. Same thing with property taxes. So we do see foreclosures happening to older homeowners because they didn't pay their taxes. And so this is something that heirs should be helping out with. Loved ones, somebody should be checking a mail, hopefully around tax time, making sure those taxes are getting paid. Because we do move pretty quick when we see taxes aren't paid, right? Because, we don't have a mechanism for getting a monthly payment. You don't have to make a monthly payment with us. So it's not like we say, oh, you don't have taxes paid, we'll just put an impound account on there. Well, we don't want to do that because then the servicer is paying money. So when we see property taxes have been missed, the servicer moves quickly to send out a letter. So let's make sure that doesn't happen. Finally, to keep a house with a reverse mortgage, you got to maintain the home. What does that mean? Well, it doesn't have to be perfect. Basically, I tell clients, when you received your reverse mortgage, when you bought that home using reverse mortgage or you refinanced, you had an appraisal done. That appraiser said that you met 4,000.1 of the FHA handbook and therefore you meet minimum standards. So just keep your home in the same basic shape as when you got the loan and you're going to be fine. So these are the three ways we see people get foreclosed on with reverse mortgage, and it doesn't have to happen. We don't have to have those stories, but sometimes they need a loved one to help them out. And well, there is one other way to get foreclosed on with a reverse mortgage. I'll get to that in the next slide. But these are the three ones that are really happening that we see on the marketplace. If you ever hear anybody say, hey, the reverse mortgages have a very high foreclosure rate, well, here's one of the reasons why. When those loved ones pass away, if the heirs don't get in contact with the servicer in 30 days, the servicer assumes there's nobody around and they start foreclosure. So our industry really isn't foreclosing necessarily on borrowers. We're foreclosing on heirs that haven't contacted the servicing entity. And so it makes our foreclosure numbers look higher, which they're really not. So that is, again, something where you might hear something, but the case is really different of what's going on behind the scenes. Okay. So remember I said that every age gets a different loan amount with the reverse mortgage. So if every age is a different amount, Ryan, give me a chart and show me what the difference is. I'll give you a chart right now, but that chart can change. Maybe it'll change tomorrow. And then I don't call you and you don't ask me and you have the wrong chart. Okay. So we in general, in our industry, we don't give out charts. We use technology that updates with the correct amounts. So we created an app for you all, and it is a reverse purchase app. If you download it onto your phone, you can calculate based on someone's age what they'll have to put down when they buy a home. Hey, that's much better than having to call me or trying to figure it out. Just whip out your phone, put the information in. It'll tell you the loan amount they're going to get on a reverse mortgage and based on age and the value of the property. Okay. So like on the reverse purchase side, hey, you put the client's age in, you put the purchase price, you calculate down payment, it will tell you what that needs to be. If you're a married couple, for government insured reverse mortgages, we only have to have one person over 62. So that changed. About 8 years ago, we wouldn't let anybody on a reverse mortgage unless they were over 62. And that's how one other way that people were getting foreclosed on. Because back in the day, they would just keep the younger spouse off. And that younger spouse, they're not on the loan. So when the older one passed away, they could get foreclosed on, right? We don't do that anymore. Our industry now lets people know, hey, if you have one spouse, you are legally married and one spouse is under 62, we will let the younger spouse be protected and stay in the home as well. So just know, if it's a government insured reverse mortgage, you can have one over 62 and the other one can be however young you are to be legally married in whatever state you're at. Okay. Unmarried borrowers, y'all got to be over 62. If you have a friend, if you have a neighbor, sister, whoever it is, and you want to do reverse mortgage together, cool. Y'all got to be over 62 or the younger one's not going to be protected. All right. 4, max purchase price. What is this? $970,000, $800. That's actually not the highest home you could buy or refinance. But after that number, $970,000, $800, we won't make our loan amounts any bigger. So like if somebody said, Ryan, I have a $2 million house, I'd say, okay, based on your age, you're going to get this much. And then his neighbor is in a much smaller home and said, Ryan, I have a house that's worth $970,000. How much am I going to get? Oh, you're going to get the same amount as your neighbor with a $2 million home. What? Yes, FHA is not into becoming like a jumbo lender, but that's still a pretty good purchase price, I think, for California. So refinancing or purchases, if you're going to buy or refinance a home over 970, 800, you're not going to get any more from a government insured reverse. Okay. Now, that doesn't mean you can't get a higher priced property, right? Now, here's something else though. The private industry, non-government investors said, hey, there's homes that are worth $2 million all over the place. It's not really fair that they can't get more money just because the government doesn't want to lend it. Hey, we'll do it. So there are non-FHA, non-government reverse mortgages where we'll take a value, I think it's up to 8 million now, 6 or 8, I don't know. It's way up there. And the idea is that you can get a lot more money on these private investor loans. The reason why we just don't do that all the time is because the interest rates are higher. A government insured reverse mortgage has lower interest rates. You do pay mortgage insurance though. The non-government loan has higher interest rates and you get more money. So usually it still makes sense for someone to get an FHA loan because it's more efficient when the house is worth less than 970. And usually when you have the houses that are worth 1.1, 2 million, et cetera, they're usually going to get the non-government because they want bigger loan amounts. All right. Well, with that being said, the app only calculates the government loan right now. So if you want a non-government reverse to see what it'll do for a house, 1.5 million, unfortunately, you got to email or call us and we'll calculate that for you. All right. Wow. Should have drinking more coffee today. I'm getting tired here. That's it for the education part of the reverse mortgage, I would say. We have a couple cool marketing things I'm going to cover with you. But after all of that we just went through, right? How a reverse basically works, how it helps your business, the little rules that we learned about. Here's what I just want all of you to remember at the end of the day. When anybody you hear say, how does reverse mortgage work? If you're in a coffee shop and you hear somebody say it, hop over there. Because what they're saying is, I own a home. I most likely have some equity and I'm trying to figure out how to get money out of it or do something with the house. That's your cue. You got to hop in there and say, I know a little bit about reverse mortgages. Oh, you do? How does it work? Well, it's a lot like a loan you have now, except when the statement shows up, if you decide you don't want to make the payment, they'll just add that payment to what you owe. That's it. And you can do that every month the rest of your life if you want. That's really how the loan works. Otherwise, it's a lot like a regular loan. You own the home, etc. You can get cash out. Oh, yeah, that's basically it. Okay. You have hopefully identified yourself as somebody that knows something, right? Don't be afraid of it. Do not be afraid of reverse mortgages. Do not be afraid when a client's asking about it. They're asking because they need help, and that's your client now. And so that's all I want you to do is recognize that. If you only get a couple things answered and you got to, hey, call me up on that 888 line, go in the bathroom and say, Ryan, they asked me this. I'll say, okay, here's what you need to go tell them. I just want you to retain them and hopefully get their name and phone number and put them in your database because we're going to work on figuring out how you and I are going to help this client get to where they need to be. That's it. That's what I want you to remember. All right. Let's have a little bit of fun. So for a lot of us, even me, that are super busy, just working our jobs every day, just getting stuff done, I don't want all of this you're learning today to be cumbersome or you to have to figure out or remember anything, because I don't. I don't retain a whole lot anymore when I sit on a webinar, unfortunately, even my own. But I still want that information, right? So if you are in a situation where you're saying, Ryan, I'd really like to get this information out to somebody I know. Ryan, how can I find some people that have reverse mortgages? Ryan, how can I find people who might be at that point where they need to list? Okay, so we actually experiment and we do things and we have some fun with this stuff. One way we help you is something called gocourtem.com. It's free. If you have somebody, maybe a neighbor, that you see that house doesn't look great, or you have an idea there might be something financial going on there, but you don't want to knock on their door and go, hey, how's the cash working out over here? Okay. You ready to sell your home? It looks like it's in bad shape. We don't want to do that. So if you go on GoCourtem and you have a couple of clients, we can't let you do this for your whole database, but we'll actually mail them for you. And not just stuff about reverse mortgages, we'll mail them a newsletter with your name on it that we have found deals with the stuff that clients are wondering when they're having a hard time. So the articles in the newsletter we wrote, which are things like, why do I need to be afraid of someone knocking on my door offering cash for my house? Why is there commercials on about all cash buyers? They need to know that they need to talk to you, right? We have an article about that. What about how Prop 19 changed how you can transfer tax base? They need to know about that. How about capital gains? How about getting a hero? We've seen a lot of individuals get heroes and then they can't afford their home anymore because the hero added so much onto their tax bill. Okay, these are things that older homeowners need to know. And if they're reading these articles, it's because they might be thinking about selling, and we want you to be the agent on them. So hop in to Go Court them, put one of your clients in there. Maybe you don't even know who they are. You just know their name and their address. No problem. We'll mail them newsletter for 6 months just to see what happens, to see if you get a listing out of it. We're not charging anybody for it. Of course, we go on there as a lender, you go on there as a realtor, and that's how we're able to do that. And have some fun. Like I said, I can't do it for your whole database because it's expensive, but a couple of clients, give it a shot. Now, Crystal's going to tell you in a minute about how we could try to find somebody who does need to list a home that's older. And one of those software tools we use is Title Pro, and we're going to give you logins for it. And we do a video, a lot of them. We'll go into Title Pro. We'll put information in there about somebody in our area about a particular situation, and we'll let Title Pro tell us who might be needing to sell. And then we actually hop in our car and we go drive and show it to you. So not that particular house, because that one's probably on the market, but the whole theory behind it, just to have some fun with it. All this stuff isn't going to cost you anything to do, just to have fun with, okay? Crystal, you want to tell them how they can get access to these things and some of the videos that will help refresh what I've just said and stuff I couldn't even cover today.
Yeah, of course. Let me go ahead and go over the course refresher that is part of our website, thereverseeducators.com, which we're going to get you logins for, and Title Pro 24/7. So later today, we're going to be sending everyone their logins that they're going to get as thanks for attending our class to those two websites. When you log into our website and you get those logins, you're going to see a few things that you can take advantage of. So let's talk about the course refresher first. So it is a video series of 6 videos, and you can watch them at your own time, own pace. Each one is only about 10 to 12 minutes long. So you can, the great thing about it is that you can go in a specific subject about what we talked about today. For example, if you just want to refresh yourself on what happened in the future with reverse mortgage, you can go ahead and just click on that video and just watch specifically that. So that is there for you, along, of course, with the recording of this live stream. Ryan, if you want to go to the next slide, I want to take some time to talk about the different complementary marketing resources that we have available. So another thing you'll be able to see on our website is these newsletters. We also have different flyers. We've got door hangers, letterheads. We have postcards. So go ahead and see what is best suited for your marketing campaigns. These are all free for you to download, and you can put your information on the back of all of our flyers. So that is awesome. Last but not least, we have a video library where we are able to show you, of course, the different videos that we've done over the years, as well as the Title Pro 24/7 tutorial is also there. As of course, once you get the logins, we don't want to just throw you a login and be like, okay, go figure it out, have fun. We're going to show you how to use that software to look for those older homeowners in your area and in your neighborhood. So go ahead and check that out as well. And if you have any questions at all, you're not getting your logins, we should be getting those to you within the next 1 to 2 business days. But if for some reason they're missing, if for some reason you have a question for Ryan or Robert, 888-242-5959, that's the number to call. We can handle all of and any of your inquiries in that regard. If you want to email Ryan directly, there's Ryan's email right there. If for some reason Ryan is just a little bit too held up, go ahead and email Robert as well at robert@reversemortgageeducators.com. And then right there, the reverseeducators.com. That's our realtor resource website. And also keep in touch on that website there as well, because we will post new OCAR classes. So if you ever want to retake this class and get a refresher, get the latest updates whenever we have our class next, we're going to have updates on that website as well. So check it out. With that being said, Ryan, you're ready for some questions?
Yeah, so let me grab Elizabeth first. On a reverse refinance, I'm assuming the borrower still needs to be 62. So, okay. Remember I said we have private products now. We can go down to 55, but the government insured reverse basically starts having one borrower 62. So for an individual that's looking to refinance, it's going to be, well, if they're 62, we're probably going to look at the government product first. If they're not 62, we can look at the private product. But you start to get smaller and smaller loan amounts when you're under 62 and you're using the private product. So it's just every case is different. So let's probably, if you have a specific age in mind and a value and you want to email me, then I could certainly let you know which product is better. Okay. Can you do reverse mortgage on a new purchase if you do not own a home now? Well, the answer is sure. You don't have to have previously owned a home to do a reverse purchase. So the main qualifiers are, do you have enough for the down payment and do you got a little bit of income to cover some expenses? So remember, on a reverse mortgage, you're putting more down than a regular loan, right? Because not having to make a payment means that you'll have interest added on every month. Remember, if you don't make a payment, your balance goes up. So we need to have a big enough down payment to make sure there's what they would call maybe an equity cushion in there to handle the balance going up. So say for somebody 90 years old, they're probably going to put down maybe 25%, something in that neighborhood. A 62-year-old on a government insured reverse is probably putting more down, like 51%. So that's the range. It's not linear, by the way. Each age has a different percentage and it's not like a straight line. So that's why we have the calculator to really help figure those questions out and not have to guess. So I use a calculator still when if I don't have my chart in front of me, because even after doing this for 15 years, if somebody were to ask me, Ryan, what does a 77-year-old borrower need to put down on a house that's 900,000? I'd say, I don't know off the top of my head. I could give you a guess, but I don't like doing that. So I pull the calculator out. So you can have that same calculator as well. Okay. All right. So let's see if I have no other questions. Thank you for joining me today. Again, feel free to use those resources. Feel free to just, well, let's just see how the loan can help you maybe establish a relationship. Not necessarily how someone's going to do a refinance or buy a house, but at least listen for the conversation, or just maybe in your own neighborhood. Take a drive around your neighborhood. Watch the video on Title Pro. You can usually see how old the individuals are that are living in your neighborhood. You can see if their houses need a little bit of work. Maybe that's an individual that should be downsizing, should be doing something. Maybe they are really tight on money and you can help them get to a different place. All right. That's
Brian, we
all for
actually
today.
have one more
Oh,
question
cool.
from Mark. Mark asked, did you cover the appreciation of what you are allowed to pull from your home over time with reverse mortgage?
Okay. So here's how it works. When you are qualified for reverse mortgage, you are given a loan amount. Okay. And that's the maximum loan amount you're getting when you get the loan. So we don't look at appreciation necessarily and say, oh, the house went up 100,000, we're going to give you more. You'd have to refinance at that point in time if you've had good appreciation. So people do refinance reverse mortgages. If you get something called the line of credit on the reverse mortgage, which you can get, the line of credit actually does make more money available over time, but it's not necessarily in relation to your appreciation. So those are some more specific questions that we have one video that covers, which has to do with buying a home or refinancing a home and getting a line of credit. And that line of credit will give you more money. It'll actually increase how much is available, but it's not like drastic. It's not like your house went up 10%, so your line of credit goes up 10%. It doesn't work that way. All right, hopefully that answered that question for you, Mark. The videos, yes, a lot of stuff that we usually cover in a 3-hour class. And I really zoomed through this class, by the way, to the point where I'm just running through a lot of slides, and having those videos that are short that cover topics I couldn't spend time on or I went through really quickly is free. So hop on there or email me. If I don't email you back right away, I do get a lot of emails sometimes. Don't be afraid to email me twice. Email me the next day and say, Ryan, I emailed you yesterday. Hey, get back to me, man. And then, of course, I'll get back to you if I see you show up twice. But we are here to try to just answer questions. We are here to try to help you in situations where it might not have anything to do with the client getting a reverse, but it has everything to do with you getting a new client into your database. Thank you for your time, everybody, today, and have a good afternoon.
Thank you so much. We'll be in touch over email. And thank you so much, Elsie and the Orange County Association of Realtors. We're so grateful to have this opportunity to take this class, and we really hope that we'll be back soon.
Have a good day.